Today, we'll have a look at Access Financial Services. We'll learn about the company, look at a brief history of their financials, talk about their recent price history, look at any dividends they may have announced and what is coming up for them. So it's going to be another great review here on L.E.A.R.N Grow Invest. So let's get started.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com.
And follow us on all social media platforms at L.E.A.R.N Grow Invest.
All right, welcome back. So before I get into the review, I want to just say a word of prayer. Thank you, Lord, for this day. Thank you for the ability to produce wealth. We thank you, Lord, that we have the opportunity to use the funds that you've blessed us with for the benefit of ourselves, our families, and those around us. In Jesus' name, amen. All right, so just to go over the format a little bit again, we're going to go through the company history. We're going to start there. Before I go any further, I will say that this review is sponsored by JMB Moneyline. We're going to be using their platform to review the price history of Access Financial for the past couple of years. So I want to thank JMB for sponsoring this video. So let's learn a little bit about Access. Before I go any further, I have to say that the information that I will review here is for discussion, education, entertainment, and illustrative purposes only, and should not be construed as professional financial advice, solicitation, or recommendation to buy or sell any securities. I am not yet a licensed financial advisor. Who knows what the future holds, right? So we're going to start with an overview of the company. So Access Financial was established in 2000 and was listed on the junior market in 2009. So they've been listed for about 14 years this year. Access is one of the leading providers of personal and business loans to Jamaica's microfinance sector. They operate through an island-wide retail network of 18 branches. The company's head office is located at 41B Half-Tree Road. Since their inception, they have dispersed in excess of 15 billion in loans to the microfinance sector, a sector which contributes significantly to economic growth. The company's micro business clients operate in the service, manufacturing, trading, and agricultural sectors. And we'll look at a breakdown of those sectors a little bit later. Their vision is to be the leading financial services provider, highly profitable employer of choice, and serving exceptionally satisfied customers while being focused, innovative, and prudent, right? And their mission is to offer exceptional value to stakeholders by providing financial services to micro entrepreneurs and individuals underserved by traditional providers. This will be achieved through a customer-centric, highly competent and committed team, providing superior services tailored to their customers' needs. And all of this that I'm reading was taken from their website, so you can learn more about them there. And this is Hugh Campbell, acting CEO for Access. We're hoping to, of course, get an interview with him soon, but that has not been confirmed to the point of doing this video. So let us go a little bit more into what they do, right? So we mentioned before, they cover both personal loans and business loans. So you're seeing some of them here. So most of their personal loans are done through what we call salary deduction, and that limits the risk of the client not repaying that loan. So, think about it. You may have a company who has employees, Access partners with that company, provides, loans to their employees, and the company then pays over from the employee's salary each month to Access, right? That's how most of their personal loans work. So you're seeing here Access Cash, Payroll Express, Access Advance, Government Cash, Government Agency. The last two seem to be targeting, government employees. And we see business loans. They do have a segment within the company that focuses specifically on business. So the business loans are granted to micro, small, and medium businesses who have been in business for at least 6 months and the business loans may be used for working capital support for the purchase of fixed assets. Loan amounts here range from $10,000 to 1.5 million Jamaican dollars for micro business loans, and between 1.5 million to 20 million for the SME loans, right? And the tenure here can range from 3 months to 3 years, and the SME loans can be borrowed up to 5 years, right? So you're seeing them, providing here products specifically for the business segment. And then of course they may have, so they have the names for them here. So you have partner loan, microbiz loan, PPV maintenance loan, green energy loan, and so on, right? So this is pretty, standard here. Companies that usually cater to specific, segments will have, products that are targeted to those groups, right? Their top 10 shareholder as at their last report, their most recent report, which was their Q3. Their financial year ends, I believe, March 31st. So this was taken from their Q3 report. I don't remember the date. I think that may be December 31st, but we'll confirm shortly. We're going to get into that. So we see their top 10 listing here. They did Proven, based on the number of units that Proven has now. A few years ago, Proven did make about half their number of shares available on the market. We'll talk about that a little later. I'm going to try and find some information about that. But they would have made some shares available, I believe, at a price of about $32 in 2019. So we're going to be, seeing and talking about the share price since that point. And yeah, so, this information is taken from their financial report. So you can always see how this is updated. So some notable companies here that you're probably familiar with: NCB Capital Markets, QAI Investments, Barita, are some companies that you may know. So let's look at their financials. So what we're going to do here is go through some highlights. They would have included in their annual report some highlights for the company for the 5 years prior, so from 2018 to 2022. And then, as I said, afterwards, we look at the 9 months for 2023. Okay. So this is a 5-year summary of some of their financial data here. So we see net interest income from 2018 would have been 1.3 billion up to 1.4 billion in 2022. So in the last 5 years, they did have a 1.45 billion in 2020, but you see they would have had a fall off in 2021, and that made some recovery there for 2022. That's in terms of their net interest income, to be specific. In terms of operating revenue, that has grown from 2018, 1.7 billion to 1.9, almost 2 billion. And then you saw in 2020 where they would have done almost 2.2 billion, right? And they have over to the right their compounded annual growth rate. Staff costs, I did notice this as I was going through in terms of their increase in staff costs. They mentioned, of course, that this was due to things like bonuses, commissions that would have been paid to sales reps, increase in salaries, etc. Of course, as a space becomes more competitive, it's natural that you may find companies either have to pay more in salaries, of course, accounting for things like inflation and those kind of things. So, but it's interesting to see how this would have, 5 years ago, they were paying 382 million in salaries, for example. That's, pretty much almost doubled in the 5 years to follow, right? So that's one thing to note in terms of them being able to manage that cost. And as the sector becomes more and more competitive, maybe on a management level, they may have a risk of, of persons going to other companies, because we do know of other companies in this space that may be seeking to, aggressively hire talent, etc. So that may be something that they have to look out for. Allowance for credit losses, of course, this is expected for the type of company. We'll see where that's at 144 million as at the end of 2022. Their 2022 financial year, let me be specific. And net net profit after tax was 437 million. That would have grown from 422 5 years ago. So of course you're looking at that. So of course 2020, 2021, if you kind of look at those as anomalies, which in this case I am, the pandemic might have, I didn't go as far back as looking as to see how maybe the stories surrounding them for 2020 to see what would have happened in terms of revenue generation. 2020 was a good year for them, but you notice in 2021 there's a bit of a fall off there, and so what we're seeing for 2022 is something close to what they would have been doing in the years 2019 and prior, which is good to see. But of course it's just something that you want to watch as time progresses, right? Earnings per share stood at 1.6, and in 2018 it was 1.54. All right, we'll talk about dividends a little later. All right, next, hopefully it is not too hard to read. This again was taken from the annual report. This is looking at net fees and commissions from 2018 to 2022. So 314 million in 2018 to 416 million in 2022. So 2020 seemed to have been their highest year with 618 million in terms of net fees and commission, right? So again, comparing to where they were in 2020, they have not gotten to those levels since. But of course, a lot of things would have maybe led to that. So we'd have to dig in to see what the commentary was around that year to understand. Maybe that was a particular. I could imagine 2020, as businesses maybe looking for financing because of the pandemic, it might have been a great year for them in that regard. But things might have, as things got maybe a little bit lengthened for 2021, maybe revenues were a lot less there, right? Total net interest income, putting everything together there, would have been 555 million for 2022, up from 343 million for 2018, right? Some of the notes here, net fees and commissions increased by 4 million or 1% as a direct result of increased disbursements. So they're saying that, compared to 2021, money service fees and commissions increased by 269,000 or 29% due to an increased volume in loans processed year over year. So that would be, second line item there. And during the financial year, the Jamaican dollar experienced a net devaluation of approximately 5%. That would be their FX loss or gains. And then other income decreased by 8 million or 5%, as an increase in bad debt recoveries in Access was offset by lower bad debt recoveries in Embassy Loans. Embassy Loans is a company that they would have acquired overseas. So that's, serves as a part of their numbers, right? So that would mean that there would have been an impact for their overall numbers due to that. All right, this is an analysis of their loan portfolio. So we mentioned, primarily personal loans, business loans, and the business loans would have been split into 4 sectors. That's what I mentioned before. So on the personal side, we see where it's 4.6, I believe this is billion. So that stands at almost 93% their overall, personal loans. And we see this in contrast with a company, for example, like Dollar Financial, where seemingly business loans take up a majority of their loans. In Access's case, it's personal loans, right? So on the business side, there's agriculture, which stands at around 47 million, services industry 85 million, trading 175 million, and manufacturing 6.5 million. So the manufacturing would have decreased greatly from the previous year in terms of loans. And then they're showing here a breakdown of what's due within 30 days, 1 to 3 months, 3 to 12 months, and over 12 months. I think that's an excellent breakdown, right? Very, very good to see this data. So of course, in terms of their allowance for impairment, you're seeing that in the second to last row, and that's 456 million for that period. In terms of their expenses, this is what we're seeing here. So we have staff costs. We made some commentary on that before. That is likely to either continue to increase due to increased competition in the space. Maybe you have to be more aggressive with commissions or other things to retain employees. And of course, you have allowance for credit losses, which is something that companies in the sector have to do. And then we have the other expenses listed there. 2020 would have been their highest year in terms of these expenses. Also would have been their best performing year, it seems. I haven't looked best performing year in the last 5 years, put it that way. These are this is the numerical data for the charts that we just looked at. We spoke about that, so we're going to move on. Next we have this is their balance sheet, summary of their balance sheet. So we're seeing from 2018, their net loans would have gone from 2.6 billion to 4.5. So that's good growth there in terms of net loans. Assets would have increased from 3.2 billion to 5.7. Their liabilities would have gone from 1.2 billion to 2.8, and total equity increased from 2 billion to 2.8 billion. Right, so that's what we would have seen over the last 5 years. And of course, on the right, you're seeing the growth rates. We have their loans payable here. So corporate bond holders, that's 1.3 billion, DBJ 752 million, JMMB 273 million. So a total of 2.3 billion in terms of loans to repay. And so that's a detail that you're seeing here. And again, broken down by period that it needs to, how much needs to be repaid and when. Again, great information to see in terms of that breakdown. I think that makes for very easy to understand, data. So this is the highlights from their most recent report. Their 9 months ended December 31st, 2022. So that's what we're going to be looking at, the highlights and the details for the next few slides. So if this information feels a little bit complex, we do have other videos on our channel where we go through it in detail. So be sure to check those out, where we just explain the balance sheet, income statement, and cash flow statements. For the stock review videos, though, we don't usually go in depth in those explanations because it's meant to be a brief review. All right. So we're seeing here net profit after tax for the 9 months being 226 million. That would have been a 15% decrease from what they would have done in 2021. Loans and advances have increased by 10%. Total assets increased by 8% and equity by 8% as well. In terms of their ratios, profitability ratios, so the return on equity decreased by 3%. EPS decreased by 15%. Their efficiency decreased by 4% from 75% to 79%. And then efficiency ratio, excluding allowance for credit losses, would have only decreased by 2% to 66%. So yeah, we're seeing that, Elaine, that you're mentioning, right? So, I mean, they've disbursed more loans this year than last, right? But in terms of net profit, it's just, we don't know what Q4 holds for them. I didn't do analysis in terms of what their Q4 normally looks like. But yeah, it would be interesting to see how they finish the year. I'm really curious to see that. So let's have a look at the income statement. So when we go through the income statement, we're looking at a couple of things here. We want to see, we want to do a high level analysis comparing, quarter to quarter. So in this case, it's the 9 months. So we're looking at 9 months this year compared to last. Our revenue is growing or shrinking, especially in this type of business. Their revenue is interest income, right? So the more loans they disperse, the more profit they stand to make. So is that growing for them? Our margins improving now. We typically are doing a sort of just an eye test for these, because we're not going into assessing like ratios or anything like that, but that is something that we would recommend you look at. Are costs increasing or decreasing? We definitely, highlighted, for example, the staff costs earlier. Those are things we look at. We already looked at also the EPS, trending down for what we've seen so far. So this is their 9 months numbers. So let's look at in terms of the quarter for the 3 months ended December 2022, their net operating income would have increased by what seems to be about 16 million, right, in total. So that's 6% year over year. And we see where in terms of costs, we mentioned that increase already would have been attributable to staff costs. We see also allowance for credit losses would have increased. Marketing expenses actually went down, and other operating expenses remained flat at 99 million, right? Profit before taxation for the 3 months are actually lower for the same quarter last year, 117 million as opposed to 123. And taxation after that, profit and loss for the period stood at, well, I paid more in taxes last year. So profit for the year would have been 93 million. For the 3 months for last year was 85. And then for the 9 months, we're looking at 226 million as opposed to 264 last year. So we're seeing that decrease, right? Yes, Elaine. So I was thinking about that as well, because we do see them have government products targeted to government employees. So it's actually interesting to see how, because there would have been a payment to public sector workers in December, and we know more is going to be coming out. So maybe, if persons were, for example, late on loans or defaulting on loans, those should be covered in terms of, monies recovered, etc. All right, in terms of, so we mentioned EPS before. EPS for the 9 months at 82 cents, whereas it was 96 last year. So that's a 14-cent decrease. Now I'm going to try and see if I can bring up data from the JSE here to see if we can get an idea as to how they usually do for Q4. All right, so let me stop sharing. Let me share again. Should have just shared my entire screen. That's what I should have done. Okay, there we go. So we're looking on the JSE website, looking at Access Financial Services. So what we're seeing here for Q4, right? So Q4 is what we're waiting on for them. We see where, so let's start with 2018. That's where we say we're going as far back as. 211 here reported a loss for 2019. Maybe that was an acquisition. I don't know. I think was that the year they acquired Embassy? I'm not sure. But there was also negative earnings reported for 2020. 2021 was 173. So 2022 is pending. So let's see how they do there, right? All right, for the balance sheet, we're looking at a couple of things. Again, same quarter-to-quarter comparison. We're looking at things like cash, debt and liabilities, retained earnings, and then receivables and inventory. In this case, we're not going to be looking at inventory based on the type of company that we're working with. All right, so we are seeing here in terms of cash and cash equivalents, that has increased to 446 million, up from 365. Loans and advances, we saw that would have increased already. Property, plant, and equipment would have gone up, but that's not really what we look for this type of company. So total assets overall increased by, is that 400 million? Is that correct? Yeah, about that. Accounts payables relatively flat. Loans payables increase seemingly by about 10%. Total liabilities increased about 200 million. I would have seen that breakdown in terms of their as at the 2022 annual report, what would have been due. And retained earnings stands at 2.6 billion, up from 2.37. So that's their balance sheet as at for the period ending December 2022. All right, cash flow statement, we're looking at, it's a company going to how they're managing their cash flow from three areas: operating, financing, and investing activities. Has the company take on any recent debt and things of that nature? All right, again, it's a lot of information, but try to follow the items that are in bold. That's kind of easier to read through. So again, I'll put the links in the description for the reports that I'm going through, but this is available on the Jamaica Stock Exchange's website. All right. Let's look at anything that stands out for us here. Interest income, we spoke about that already. Interest expense up to 199 million. So that's on this side that we're looking at here. Loans and receivables written off, right? That's up from 85 million to 102 million. So that's what, 17 million more. Increase in allowance for losses, that's also up. Income tax, we see that that's up. And in terms of accounts payable, I mean, that's up from 177 million. Interest received 1.3 billion. Loans and advances dispersed, we spoke about that already. Loans and advances settled, that's pretty much the same as the previous period. And then they have loans payable at 659 million in terms of at the end of 2022. All right. In terms of cash used in investing activities, so they would have acquired property, plant, and equipment for 53 million, and that's about it. For financing activities, they would have had dividends that they would have paid of 137 million. We'll talk about their dividends a little later. And then in terms of their cash position, we spoke about that already from the balance sheet. All right. Sorry about that there. All right, so let's look at their price history. We're going to be using JMMB Moneyline to go through, but we're going to look at a high level first just to get some of the statistics in. So week to date, up 1.3%. This was as at yesterday. This is when this data was filled in. Month to date, down 2.19%. Same for the quarter. Of course, we're in a new quarter. Year to date, down 1.6%, right? And what we're seeing is an overview of the chart on the left, top left. It's kind of been, up and down to say the least for the last 12 months. Of course, we'll talk about some of the things that might have led to, an increase in price sometime last year, because we see maybe around June, July last year, it was below $20. Then it went to a high of almost 30. This looks like about 27, 28 here. Then it made its way back down to 20, then back up a little bit closer to 25, and so on and so forth. So it's been kind of, it's seen some up and down movement, right? 52-week range, $17 to 30. And that's what we would have seen definitely. Volume, we say 2 units to 67.8 million units. Now, that trade of the 67 million units, remember, would have spoken about, let me see if I can go through that quickly here, where when we were looking at the top 10, all right, so that 67 million units, I believe that trade hadn't been disclosed as yet. All right, so it's a 67 million units here for Proven or Spring Hill Holdings. It's one of those two. I guess the assumption is that it would be Proven, but I don't think it has been confirmed yet. I'll check the news. Maybe I'm wrong, but I don't believe that was confirmed as it, right? But 67.8 million units. Shares outstanding stand at 274 million. So not a lot of shares actually. available on the market, I believe. When Proven would have sold half of their shares in 2019, they would have added more shares to the market than were available previously, right? So this is one of those that is very tightly held in terms of the top 10, well before 2019. And it means, I mean, if Proven sold their half, which was about 67, 68 at the time, if you take that away from the 274 outstanding, you see it's not really a lot of shares there, right? In terms of buy and sell orders, we'll look at that when we go on to Moneyline, right? So let's do that now. All right, so you're seeing that. Let me go to JMMB, Moneyline. So let me zoom in so you can see my screen a lot better. So to access the stock market information, go under other services. You'll see stock market summary, and then you will see the market data here. So at a high level, you're seeing stocks advanced, decline, traded firm. You can normally just search for the stock name here. So once you know the ticker, you just go ahead and search. And then of course you can search by particular market, whether main market, June market, main market or junior market. Since we're looking for AFS, it's right at the top here. So I'll just click on it. So 59 units traded today, a low of 24.98, high of the same. So pretty much the price didn't move at all today. And this is, so before Proven would have made the shares available, I think in 2019, the price would have seen, I think, a high of about $56. It says 52 here, but I have some other information which points to about $56. And it hasn't seen that high since, right? So it's been, I believe, Proven made the shares available for about $32. But let me see, hold on, let me check. 5 years, I believe it was made available in 2019 for $32. Let me try and find that information. Access prospectus. Should be able to find out. This would be their. What would I search for to find it? Proven. Search for that. Proven sells access shares. I'm looking for, is this it? I'm just trying to get the exact dates. That's kind of what I'm looking for. September 2019. Okay. All right, so September 2019 was when they would have, September 2019, so about $32. So it would have been trading in August 2019 at about $40. They would have made shares available for about 32. So, okay, I just wanted to be sure that the data that I was seeing here as reading correctly, right? And since then, it's gone to a low of about $17. We saw that already. And for the 12 months as high as 30, right? Not much to see today in terms of activity. In terms of the queue, not much really on the buy side. You're seeing just 13 orders. This looks like a total of maybe 12, 13,000 units. So not really high demand we're seeing for shares right now. And in terms of shares available for sale, this looks like maybe what, about 100, maybe 200,000 shares just from quick assessment here. Highest price of about $30, right? So I think if we go back to that top 10, I wanted to just do a quick calculation to see how much shares were actually I'm looking. Let me look at the archives here. Did they make available their top 10? I believe they did, right? Yep. So I wish they would have done the total here, but let me just let me just add this up quickly because 47%, 24%, that's what, 70, 73, 79, maybe about 87, 88%. That's what I'm seeing there in terms of top 10. All right, so that if let's say 87% of 200 odd million shares, so that just, I mean, still not a lot of shares available on the market, I'd say. So yeah, who knows what the future holds in terms of that. I won't speculate right now. All right, so let's move on. So let's look at their dividend history. We have here dividends on record. The last dividend payment made would have been February 23rd, or in February this year, payment date March 9th of 10 cents. And you see the history here of 10-cent dividends for last year. For example, they paid 4 dividends totaling, that's 65 cents for the year. So if you put that over the share price, you'll get the yield in terms of if you would have purchased these shares last year. But they seem to be paying, this looks like, is it every few months? So February, July, August, and November. So they seem to pay at least 4 times per year, but without the history, without more history, it's hard to say, right? But they paid 4 times last year. Maybe they'll do the same this year, but the yield seems to be, relatively low based on current prices, right? This is the dividend and shareholder return chart and some other ratios. So we mentioned the return on equity before. We have return on asset as well, being 7.8 at the end of their financial year last year. Earnings per share we saw at $1.60. Dividends paid 65 cents. We just mentioned that before. Dividend payout ratio here is 40.7%. In 2019, they paid out 76% in dividends in terms of their payout ratio. Dividend yield 3.2% for last year. Book value $10. Market price at the time was $20. We see where it's around $24 now, if I'm not mistaken. And some other details here. PE stands about it was 12.5 times at the end of last year, and this, where it was in previous years. So it has come down significantly. So that's something to consider, right? Okay, so let's talk about what's going on with Access. Now, a couple of things that I'll mention here. Let me actually just bring up my other screen here. So everybody, I'm sure, would have heard about Access in the news. We're going to look at some of those articles, right? Give me a second here. Financial services. So I'd like to know your thoughts on Access. For those who are watching, let me know in the comments below. What are your thoughts on Access, right? So a few things that I'm seeing here. So some notable things, of course, they're added to the list of companies approved under the Microcredit Act of 2021. So they're listed on the BOJ site as being one of the approved companies. We do expect some amount of consolidation to take place in the space, just from conversations we've been hearing. No, we don't know. We haven't heard anything from Access in terms of acquisitions, maybe for smaller companies, in terms of plans or major plans for growth or anything like that in a while. Let's go through some of the news articles here and see what we can find. So a couple of things I noted as I was going through this review, right? Some movement in terms of management. If you look at, so this is the JSC news for AFS, right? Resignation of senior manager. They would have had their recent appointment for CEO for December 5th. That's Hugh Campbell, who we showed earlier. Another senior manager resigned here. So this one is Frederick Williams. Here it was Keisha Smith. So a and we've seen, we heard about the resignation of Davita McLaren last year. Actually, we heard that she was going over to Dollar Financial. That was, later reported as changed as well. So I believe I saw a couple more of those statements. Resignation of director here for 2022. So seemingly just at least from the outside. Now this, with, let me just see another. I believe I went up to 5 pages. All right, so announcement of management changes there again at June 1st. Let's see what this one was. Okay, appointment of Marcus James as at June 3rd, 2020. He takes over role of chairman from Christopher Williams, who remains director of the company. Okay, cool. All right, Mr. James, who founded AFS in 2000, headed the company as CEO from its inception until 2019, where he took the role of group CEO with the acquisition of Embassy Loan. So we spoke about that previously. A wholly owned subsidiary located in Florida, USA. Okay. All right, cool. All right, let's go to one more page. Okay. All right, cool. So we would have seen just three announcements in terms of management movement. So let's see if there's anything that we can see here. So this one, right? Of course, everybody would have heard about, the discussion around Dollar Financial, making a bid to buy Access. Access later came out and said, there's no truth to that. So that's what we're seeing here, right? Not for sale comments came in response to shareholders' questions at the company's AGM held in Kingston on Thursday, as a further rebuff to rival microlender Dollar Financial, right, who expressed interest to talk about the possibility of buying a controlling stake in half in the company, right? Whose market value of outstanding shares would have been 6.93 billion at the time, right? There's really nothing to consider, and so on and so forth, right? So that's pretty much what was being said at that point. It says here we're positioning ourselves for growth. We get strong support for our business loans in the central part of the island. For us, that is the heart of Access micro businesses. That's an interesting statement based on the makeup of their loans in terms of the heart of their business, but that's not what the data shows in terms of the bulk of their loans. Access announced early last month that the BOJ recently granted regulator, which had granted approval, which allows a company to offer microcredit services. We spoke about that before. Okay, so we're not seeing anything else here that would be relevant to that. Okay, so the Access CEO said that the company has funds in place to execute its expansion plans. Not sure what that was. It's a key to this ability. He noted was a recent $2 billion bond raise. So let's see when that was dated. This was September 1 today. Okay, so there may be some announcement coming soon in terms of how they plan to use this money or what would have been done with this money, because September to now, that's 7 months, 8 months. So that $2 billion, we'll say whether it's been used to either increase their loans or being used to maybe acquire another company, or let's see how they plan to grow as a result of that. Let's check out any other articles here. Access Financial launches road tour to empower customer base. Let's see. All right. So they've launched a road tour. This was in October. So good corporate governance. I'm just doing a speed read here. All right. So this is just speaking of So let's call those highlights. I didn't see anything new there. All right, so we're not seeing anything else really in terms of news for them here. So I would definitely access points for growth. Okay, all right, let's see what this says. Okay, despite the double-digit dip in net profits, I mean, we're seeing here based on what the 9 months shows, right? So at this point, they wouldn't have had the 9 months numbers as yet. So despite recording a double-digit dip in net profits for the 6 months ended September 2022, seems poised for growth according to development and economists, financial development economist and financial analyst Dr. Chris Stokes. Access disclosed a less than favorable half-year drop of 26% in net profit at that point. But Stokes says the company appears to be making the right moves, right? So the indication that some substantial investment in IT infrastructure will be made and that a strategy of geographic and business segment diversification will be deepened suggests a repositioning of the firm for continued growth. That would definitely be good to see as we move into what he expects to be a sustained period of interest rates higher than what they have been. AFS's first line of defense is its governance structure and risk management practices, right? In other words, systems and leadership to navigate what may come, right? So that makes sense. Would have looked at that data already. So debt financing here, he says will become more expensive and continued write-offs in the consumer loans business may be expected to accelerate, consistent with what we have seen in other financial institutions, right? So they learned from Scotiabank in the 1990s crisis that loan policy matters, and when one chooses between balance sheet growth and containing loan risk, the latter will prove better sooner or later, right? So that's just speaking about the importance of ensuring that the company is in a good position should things get a little rocky, right? So the company would have received a BBB rating from Carrie Chris. The rating was considered adequate and indicates that Access has moderate credit risk, right? The review on November 3rd said that the outlook for Access was stable. Okay, so that's good. And the expectation is that over the 12 to 15 months, they will continue to record good financial performance and maintain all of its key credit drivers, including good asset quality, as well as adequate capitalization and liquidity metrics, right? And all the other information there we know already. Let's see if we know about the resignations already. Take over the, okay, that's 2021. All right, I'll just do one more scroll to see if there's anything that we know. There was a partnership between Fosrich and Access that was announced. I think that's something we all know about already. Let's see, let's go to page 3. Okay, that was 2021. Shareholders approved board expansion. Okay. Okay. All right. So I think that is it. So I'll just say, I believe that's it in terms of information that I wanted to go over. I'd just like to say, before I say my final comments here, this review is sponsored by GMMB. So I thank them again for sponsoring this episode and providing me with access to their Moneyline platform for us to review the price history. In terms of what I think or what I expect to see from Access, I think they have an opportunity with just some of the noise around the company that we might have seen last year in terms of the news around dollar, possibly acquiring them, etc. I think they have an opportunity to come out and maybe show, where the company is right now, what their intentions are. I thought it would have been a good opportunity for them to sort of control the narrative, show where their company is, show what they've been up to, etc. I mean, but we haven't seen or heard anything much from them. And with some of the movement we've seen in terms of management, the news around, one of their employees going over to dollar and then later on resigning, it kind of signals that there were maybe things happening or things being discussed internally that might have been, causing some issues. Either way, I mean, I think it's an opportunity for them to take advantage of the recent, microcredit act. If there are, companies that they can seek to acquire to continue to grow the business, we see, information about possible, geographic expansion that would be good. Investing in technology and governance, those things are good as well. In terms of, movement activity in terms of the stock, we're not really seeing that. I did mention that $67 million trade. I don't believe we got any notice on that, right? So, but based on the number of units, of course, the suspicion is that it is somewhere in the top 10. As to who, we'll see. We'll see that. Let's see what the last press release was here. I'm just checking to see if maybe it was announced and I missed it before I close out the video. Okay. All right. So not seeing anything there, right? So yeah, I think it's just one to just kind of wait to see what happens. The trading activity seems to signal, so volumes have been pretty much like non-existent, except for on April 5th, 67,861,430 shares traded. And again, that would, let me see if that matches 861,415, right? So 67,861,430 shares traded on April 5th, and Proven's number of shares stand at 67 million shares, right? And that was at December 31st. So it's likely here, based on what we're seeing, that Proven has sold. Who they sold to, we don't know. So we'll have to wait to see more information there. I just think in general, as I was saying before, they have an opportunity here to kind of just kind of like what's the word I'm looking for? It's almost like, I believe it would be good for them to maybe kind of show us what's happening with the company. Like I'm at a loss for words. I apologize for that, but I thought, just coming out of that, they would have maybe taken advantage of, kind of show the stability of the company, etc. But their performance has actually not been, I think, I wouldn't want to use the word, choosing my words carefully here. We're seeing the performance for the 9 months as potentially going to be ending lower than the previous year, right? So that it could either be competition in the space, could be, the state of the market. I mean, it's interesting to see, and we're going to be doing a review of dollar versus access soon. We're kind of compare, side by side the numbers and see, because we know from the perspective of dollar that dollar has been growing. Now, are they growing? Is it that the growth of one affects the growth of the other? I mean, it depends, right? What do they both, contribute to the overall sector is what I'd be thinking about. I'd love to get my hands on that data before we do that review. So that would be interesting to see kind of what the market share is for them both combined, and then for one compared to the other. So that's one of the things I'll be looking at for that versus series. So yeah, I mean, I would love to speak to the CEO, learn more about the company, see where they're headed, see where their mindset is in terms of growth plans. But it's not a company we hear a lot from, and we saw those recent changes. So they're maybe trying to replace those persons and just kind of position themselves for moving forward. So yeah, hopefully you enjoyed this review. If you did, remember to leave the video a like, leave a comment below the video and let me know which company you'd like us to review next. We do 2 reviews per month, all sponsored by JMMB. So again, I just want to thank them for providing us with the resources we need to do this review. And thank you for watching, and I'll see you for the next review, which should be coming up in about 2 weeks. All right, take care.
Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow